classes. Okay, so let's go straight with it. I'm going to show you how I will have entered this trade and how I will not be panicking now. Okay, now this is what I was trying to explain. Let me just go to the concept of balance, imbalance, and then straight away to supply and demand. When you have balance, with that with a candlestick, when you go to the higher time frame, like monthly time frame, like weekly time frame, like daily time frame, when you see a particular candlestick, it already indicates that you can know if there's balance or imbalance. Mr. Olale can go ahead. You want to say something?
You can't see the screen. I don't know. Maybe it's from my head.
Oh, sorry. I'm sharing my screen now. So I was sharing. I forgot that I've already on the monitor, so you will see it soon. Okay, so you should be seeing it now. Okay, so like I said earlier, the concept of balance and imbalance, your candlestick can easily figure that out. How are we going to know where there is balance and imbalance? Let me go to higher time frame now. If you study candlestick properly, everybody that have passed through my training, the first thing I do teach is candlestick. Okay, now this is how you know when there is balance in the market. This is how you know that it's balance in the market. There's what we call pin bar and then inside bar. Okay, but I will use that just for me to explain it now. I will not take all the time. Look at this level now. This is a bar. This is an inside bar. Inside bar meaning that the previous candlestick, the next candlestick that comes in is inside the previous one. Either is inside or it covers it. In the case of this one now, it covers it. Now this level is this level now that we have this candlestick and all of that, that's the balance area. It means that there is both activities of the buyers and sellers in the market. This level is a balance area. Okay, this level that we have here is not a balance area. This one that we have here, if I go to lower time frame, is not a balance area. Why is not? It's imbalance because you can see that there's no inside buying within it. So using candlestick to verify your supply and demand, what I've just done now, I've done my supply and demand straight away. If you want to do support and resistance, what are you going to do than these areas that I've already marked? Can you see the concept? Can you see the concept that ICTO, SMCO, price action, everything, they are still saying the same thing? Do you understand what I just did now? Am I making sense at all? Are you seeing what I just explained with just few statements now? So this area now, if I want to do, that's why I said earlier that it's still the same thing as supply and resistance, supply and demand. In case of anything, immediately price come to this place, even without any negotiation, what we're supposed to do is to start looking for a buy opportunity. Not even talking of this last week that has already last month that has already given us this candlestick. Now we need to do some adjustment because this time frame is a very high time frame. We can go to lower time frame, then do our adjustment properly. Okay, then I pick this as my demand level, supply level, and then this level as my what? Demand level. Now when it comes to supply, I've explained balance and imbalance. Do we understand balance and imbalance? All this level now, all this section, I'm going to use my arrow to mark the balance or imbalance. All this section is imbalance. Why is imbalance? Because the sellers are more than the what? Buyer. Here again, I spot balance area. You can see that there's an inside bar here. Okay, so if you don't understand candlestick, inside bar and what's it called, pin bar, I will send it to the trading room platform. So, but for others, if you want to get it, I will not send it for you for free. But for the trading room, of course, they have legal reason to. I will send a PDF on that you can study more. But I believe all of you should know pin bar and inside bar. So we can see this area. This area also again is another area of what? Supply. Are we together? Because I can see what? An inside bar. Now this is weekly. If I go to daily again, I will see inside bar in another area. Okay, this area now is an inside bar, and this is the area that we want to look for our sell opportunity area that we're supposed to be selling since last week Friday. This is what's today's date. Today is Wednesday, Thursday. This is Monday. This is Friday. Okay, we're supposed to be selling this pair since that day. Okay, and fundamental also has already confirmed for us to sell this pair. You can see that now because I was able to grab what? Imbalance area. So imbalance areas are the areas at which price is going to turn around. are going to turn around. So this is imbalance area, that is one, and that is balance area rather. This level 2 from here to here also is a balance area. If I go inside and inside, I will be seeing those balance and imbalance area. Even till 1 minute time frame, I will be seeing it. Now what will differentiate each of this level is that if I take an imbalance area or supply and demand area in 1 minute time frame, I should not be waiting for a whole day for me to leave that trade. 15 minutes are supposed to be get out of that trade because of the level of that imbalance area and balance area are very, very what? Are not strong enough. Mr. Lalekan, please go ahead.
Please help us remove that arrow stuff. Okay, thank you.
Okay. So I only use those ones to identify the imbalance area. So the imbalance area is what we call the impulsive move when it comes to Elliott wave and all of that. Okay, but there will always be what? Balance and imbalance. Now, for you to be able to get your inner resistance or supply very well, what you need is to understand the concept of this balance and imbalance area that I've explained properly. That is one. Secondly, now let's now go to supply and demand. Okay, there are 4 possible ways that you can understand supply and demand. 4, just 4. Now I'm going to sketch it out now. We have drop, okay, then we have a base, okay, then we have what? Rally. That is 1. So that is 1. Then we also have rally, we have base, okay, and then we have rally. That is 2. Now the third one we have the third one is drop, okay, then we have base, then we have drop, right? Then we have the fourth one to be rally, then we have base, then we have what? Rally. These are the 4 possible ways you can see your levels. Where are your levels? This is my what? My demand level. If price pull back to this place, now there's what we call unfulfilled order. If price come back to this place, it's coming to come and pick the unfulfilled order of the institutional traders, then to continue to the what? Upper side. Okay, that is one aspect of it. Then if price come back to this area also, I'll be looking for price to pick the unfulfilled order, because there are some orders that did not pick up then. Okay, if price come back to this area also, I'll be looking for opportunity to what? To sell. And this is what sometimes we consider as those people that trade first time visit and all of that. Price come back to this place, look for opportunity to sell. This should be your entry model. This should be your entry model. Mr. Dayo, over to you.
Yeah, boss. Just one quick question before I forget. How long can these levels hold before we can no longer count on them?
Good.
How
Now,
long
there are
can
ways
they
to
hold?
identify them. We have strong, or very strong, we have strong, and then we have medium. Are you with me? In terms of those levels, there are ways you can identify those what? Levels. Now, when we have this level now, let's say it's a very strong one. How do we identify a strong one? It means that price will not stay in this place very long. Okay, when price is forming that base, it will not be something that is spend a lot of time. Okay, so when price come to that place again, that is now when he wants to spend a lot of time to make decision, because now he's now feeling a pile of order, and then price will not go up. That is very strong. Okay, so we just two candlesticks, we'll be able to identify that. The last book I sent to the trading room, go and read it very well. You understand what I'm saying. Okay, but when we have, if this level is it has a lot of ranging, the ranging is too much. There are quite a number of too much of ranging here. There's possibility that level might not hold. Do you understand what I want to say now? Now let me quickly give you an example of this on this particular pair. Now, why am I going to pick this order, not this order first? The reason I'm going to pick this one is because you can see that the sharp movement around this place is not much. Someone here, an ICT guy, will want to sell here based on fair value gap or anything they call it. Okay, but you can see how price came back and quickly booked that level. Now, this is where I'm going to stay. This is where I am waiting for my order to be picked, because you can see the candlestick formation around this place is not much. unlike the one you have here. Okay, look at this one now. We have a lot of candlesticks. This one is not going to be too strong. If price break this place, probably price we want to have. If price not break this, probably we have a reversal here. If price come to this place, there's high possibility that price is going to break it to this place and then come down. There's high possibility. Now look at this base that we have here. You know, I've already told you about balance and imbalance area. So this is a balanced area. Look at the base we have here. If price come to this place, I can tell you that there is high possibility that price is going to quickly rally away from this place or drop away from this place. Why? Because we can see that there's no much what ranging around here. Sadayo, I believe that has answered your question.
Thank you.
Good. So now you can see that this concept is a little bit different from what they will tell you on support and resistance. It's quite a little bit different. Now let us look at it now. Let us just use this chart and then identify. Let's backtest this first. Let's backtest this. Now look at the same example I gave you earlier. If I had put myself here, look at this. If I still want to make this place hold, looking at the formation of candlestick here, we can see that the first time that price visited this place went up. When price came to that place again, this was the first time that price has already picked the unfulfilled order here. It has picked it, and that is enough. You don't need to disturb yourself again here. When you're now waiting for it here that it's going to hold, and you say it's not holding again, the levels of the orders have already been fulfilled totally. Do you get that now? And where price is coming from too is very, very important. You can see that price has already broken all these highs. Okay, mitigate all this high, then is now coming down to what? So now pick another order here. Where is that order? This is it. Why did price obey buy here? Why did price obey buy here? Because of what? There's another word, demand area here. You can see. You can see. So I won't want you to use all these things as a support and resistance. I'm going to tell you how I was able to now another thing is that let price mitigate those areas most of the time, meaning that you see a pin bar or some other candlestick formation another level so that you'll be able to know your formation to buy upward on these levels. That is my also so that you're not just rushing. But sometimes I rush in when it comes as at my entry level. Now all these ones now I will not pick it as supply and demand. I will pick them as support and resistance. I will give you, for those of you that are on this meeting now, I will give you how professionals draw support and resistance. There are 3 rules for it. 3 good rules for it, and I'm going to give you quickly. The first rule is, I'm digressing a lot, but I need to discuss about this now. That's why before going back to the entry model, I want to show you. The first thing is there must be proper rejection around that level that you want to draw. Okay, so and then under proper rejection, there are 2 rules again. For you to just support and resistance as a professional will do it, there are 3 rules. Now, out of these 3 rules, this is the number 1 rule. The one rule that there must be proper rejection. How do we know proper rejection? Is it that when price turn around, this proper rejection is in line with what? With our supply and demand. That's what I just told you now. But this is the first thing. This is the first you need to know about the proper rejection. At the level you want to mark as your rejection, price must travel very long away from that place. Look at this place. When price left this place, it covers a very long distance. That is one rule. Now, I will not mark this level as my support. Do you know why I will not mark this level as my support? Because this level, price do not what? Price do not travel very long from here. But here now, I will mark it as my support. Okay? Then I will mark this as my resistance also, because when price left here, price travel very long. That is number 1 rule. That for proper rejection. The second rule for proper rejection is that price must spend a lot of time in that direction. Now look at when price left here, 2020, that's October 2020, and it got to this place February 2023, almost a year. That means this level has fulfilled my order. The first one is what? That price must travel very long, and the second one is that my price must spend a lot of time. So that means I have proper rejection around that level. And I also pick it here also because this is also a proper rejection area. Okay, why will I pick this? Previously, price travel very long. Okay, so that is the 2 thing. The second thing about supply and demand is that there must be multiple rejection. Okay, if we go back in time, let's go to the monthly time frame and see these 2 places I have marked. you must see that automatically there must be what? Multiple rejection. Price is there now. Based on this alone, confirming it with my supply and demand level, which is this is a what? A demand level. We're supposed to look for opportunity to buy already from the beginning of this month. Already we're supposed to be looking for buy opportunity on this now. This is you get this concept very clear. You will be a very good analyst. Your problem might not be maybe you want to learn how to manage trade and all of that, but analysis will be very difficult for you because you are not having a clear vision. I did this drawing on daily time frame, or I think 4 hours or so, but when I look at monthly, look at how it aligned with it. Now I've talked about 2 rules. The third rule, who can tell me the third rule? I have some of my students here now. Who can tell me the third rule? Ekene, what's the third rule? Can you hear me?
Yes, I got it. I'm not home. I'm not home. I'm not my notes right now. I forgot something. It's not my home.
All this is okay. It's okay. All this is I'm saying now. I do not have any book teaching it. It's already here. I understand that maybe the level of which I'm trading already is higher than yours, but please always make sure you digest everything that I've said. This thing, most times when there's a book I can send to you that I read on this. There's a book I read on this. How professionals do also support and resistance. I'm going to show you the book. So, and everything in that book is just what I'm just talking about. I just summarize down.
Bro, please share it with us, sir.
I will not send that one. That one is. I've already explained it now. You don't need it again. I'm Mr. Dayo. Effect Babu material me turn. I be Mr. Gabriel.
I learn from your boss. No, you are our boss. Let's take everything.
If you know the amount of
you produce yourself in us.
Is a maybe 5-page PDF, but I bought it for was not $300. 5-page, but it explains everything. This is it. How professionals do support and resistance. It's just what I'm telling you. All the information you are going to see there is the same information I'm telling you now. Okay, so let's get back to work. The last one is I've talked about proper rejection. I've talked about multiple rejection, right? The last one is most recent rejection. There's no need for you drawing a level at which there's no most recent rejection about it. Okay? This same thing I explain now automatically align itself with supply and demand. Now, this is it. If price is leaving a particular level, what you just need to do is that it will get to this place before there's a turnaround. It will get to the other level before there's a turnaround. If price wants to go back to this place now, price can play around here before going, but in matter of time, price will still come up here. Price can liquidate all this area, but will still what? Come back to this area again. Unless if price wants to break this level, and then we have another what? Demand area here. So this is the concept that explains zone to zone trading properly. Mr. Gabriel, do you remember that?
Yes, sir.
Now, if price has not leave this particular zone, don't come and say that you want to start selling in this zone. Okay? As far as price is here, this is why I was so skeptical about my word sell. And I saw from Friday, I saw a sell, but I don't want to enter that sell because I know that all what I should be doing here is to buy. Okay, now let's look at that sell again now. Where is the area that will now confirm that? For me, now the reason I should sell here is because we have drop. Let me quickly explain that. Drop, then we have a base here, then drop. So when price come back to that base, what happens? We should be looking for opportunity to what? To sell. That is why I have it. This is what we call aggressive entry. No confirmation, nothing. Price go to that place, you enter. Now, let's look at what the mistake I did was I was supposed to have entered this. Even since fundamental is telling me that I should enter, I was supposed to have entered this. At least this is 80 something pips. At least if I'm able to make 100 pips from it, now something. Now, but because of where price is coming from is a very key area. Assume what I have here is this. Assume this was the area that price came to. Okay, look at this. When price fell like this, drop, gave me a base, then drop to this place, and then price come back to this place, I will sell it conveniently. But the reason I do not want to sell this conveniently is that where price is coming from is a key support area. Is a key support area. We have identified support area now, and then that is why I'm a little bit skeptical. But how will I enter for my what? Conservative entry? I've shown you that if I want to just be an aggressive man, I will have entered here, right? But if I don't want to enter as an aggressive man, I want to enter as a conservative man, what do we need to do? Let market structure happen here. Go to your 4 hours time frame, go to a lower time frame. Now begin to use for other reasons that you can sell this. So if price give us something like this, come back to this level, we will now see that this is also what? Why are we going to sell here now? We now have another demand area here, supply area here. Can you see? So I want price to come back to this area, then I will sell because structure has already what? Changed. Then this is aggressive entry is just on that level. Conservative entry is that you wait for price to what? Come back to that region, okay, and then break market structure. So conservative entry is in line with what is it called? Is in line with what did I call it earlier now? Please remind me. Is in line with market structure. Okay, conservative is always in line with market structure. And these are all the things I'm seeing on USDPS. That's why you see me so conservative on USDPS. Now, if you trade chart patterns, of course, you can use your chart pattern. What chart pattern do we have here? We have rising wedge, right? You can now start using other things. If you want to use Fibonacci retracement, let's look at other reasons. There are now confluences. What is this? This is about 50% to 60% Fibonacci retracement level. Still the same thing. I'm supposed to drop this a little bit downward. Okay, so we can see this now, around 50 to 61% Fibonacci retracement level area. That's the Fibonacci what? Retracement. What other things can we use? Trend line. They are now added reason for you to what? To come in. You can see. Then you can now dress your chart, do anything you want to do, and then perfect it. You can see. You can see that price are already about to change structure. But now, where are we going to wait for? It might take you till next week. That price will come back to this place. Tick enough. Let price give us a clear breakout, come back to this demand area, and I will sell. This was the same thing I did on USD, EURUSD last week when I started selling here. Now, what was the mistake here that I made here that did not make me to pick this order? Because there's already a demand zone here. I'm supposed to understand that the price has come to that zone very well, and all the confirmation has already happened. Even if I didn't enter immediately here, I'm supposed to have entered based on structure here. So that was what I was waiting for yesterday. This was where I was waiting for this week for price to break, and then immediately price broke that level. What do? We get in for a buy immediately, and at least price will get to this place. Okay, so this one will get here, no doubt, because this level will not hold water. Okay, then maybe one of these days I will come online again to explain how to know the one that will hold water, or the one that are basket, or the one that are bow. Do we understand that? This class that I've just done within the last few minutes now, is it impactful? Do you